A single whale just dumped 24,000 Bitcoin, causing a flash crash. But what happened next is the real story. The market just shrugged it off. This shows some serious strength we haven't seen before. While analysts like Ben Cowen are calling for a big September drop, others see Bitcoin pushing for one last run to $130,000 before a massive correction. Meanwhile, big companies are quietly buying up all the crypto they can get their hands on, and new partnerships between projects like Cardano and XRP are forming. Is this the top, or are we just getting started? Some are even saying this cycle won't peak until 2027. You need to know what's really going on behind the scenes. In the latest video from Altcoin Daily, the host explains that the current cryptocurrency market is in a consolidation phase, similar to late 2023 and 2024, presenting a buying opportunity. He mentions that September is historically a down month for crypto. The host is personally buying Bitcoin, Ethereum, XRP, Salons, and Avalanche, and predicts Bitcoin will reach a minimum of $150,000 by the end of the year. The video touches on the Trump family's reported investments in Ethereum and other cryptos. A clip is shown of SEC Chair Paul Atkins, appointed by Donald Trump, expressing his goal to facilitate crypto super apps in the United States by streamlining licensing. It's also reported that 70 publicly traded companies now hold a combined 4 million Ethereum. Ethereum is noted as the fastest asset to reach a $500 billion market cap, achieving this in 5.8 years, quicker than Bitcoin and major companies. The video points out that the amount of Ethereum on exchanges is at a multi-year low. Billionaire investor Tim Draper reiterates his prediction of Bitcoin reaching $250,000, citing it as a hedge against government spending and inflation. The video also highlights that Bitcoin's surge from $15,000 to $124,000 has occurred largely without significant retail investor participation. Bitwise is forecasting a $1.3 million Bitcoin price within the next 10 years. It's mentioned that institutional investment in Bitcoin ETFs increased across the board in the second quarter, with BlackRock alone buying more Bitcoin than is being mined daily. The video concludes by discussing the upcoming Clarity Act, a market structure bill expected to pass around September or October, which is intended to provide a clear regulatory framework for digital assets in the U.S. The video's bullish outlook is certainly capturing the current excitement in the crypto space. The predictions of Bitcoin reaching $150,000 by year-end and even $1.3 million in a decade are bold, but they reflect a growing institutional interest. For instance, Bitcoin is currently trading around $112,209. It recently hit an all-time high of over $124,000. Ethereum also saw a new peak, briefly touching $4,953.73 before pulling back to around $4,567. These price movements are happening against a backdrop of significant regulatory developments in the United States. The Clarity Act, mentioned in the video, is a real piece of legislation that aims to provide a clearer framework for digital assets, which could encourage more investment. Recent announcements from the SEC under a new administration seem to be taking a more crypto-friendly stance, which could further fuel the market. However, the market is not without its immediate challenges. There has been some recent selling pressure, with a notable whale moving a large amount of Bitcoin, causing a dip in prices. This volatility is a reminder that while the long-term picture may look bright to some, the path is likely to remain turbulent. In the latest video from the Crypto Tips channel, the host discusses a recent $310 million Bitcoin flash crash caused by a single whale selling over 24,000 Bitcoin. He explains that while this may cause panic, the entity responsible still holds a significant amount of Bitcoin. The host expresses a positive view on the liquidation of both long and short positions, suggesting it leads to a healthier, less leveraged market. The video also touches on Ethereum's strong performance in the third quarter of 2025, with a nearly 93% increase. Additionally, the announcement that Emirates Airlines will begin accepting Ethereum as a form of payment is mentioned as a sign of growing adoption. A significant portion of the video is dedicated to the rapidly increasing U.S. national debt, which has surpassed $37 trillion. The host argues that this escalating debt strengthens the case for holding Bitcoin as a long-term inflation hedge. The video's points about market volatility and the growing U.S. debt are particularly relevant in the current climate. The recent flash crash, reportedly caused by a whale rotating over $2 billion from Bitcoin to Ethereum, highlights how influential large holders can be in this market. This move seems to have contributed to Ethereum's recent surge, which has seen it outperform Bitcoin year to date. Institutional interest in Ethereum is also on the rise, with significant inflows into ETH-linked funds. The mention of Emirates Airlines accepting cryptocurrency payments is part of a larger trend of adoption in the travel industry, with several UAE-based airlines now supporting crypto transactions. The concerns raised about the U.S. national debt are echoed by recent reports, with the debt having recently topped $37 trillion and projections showing it could surpass $53 trillion by 2035. This macroeconomic backdrop is often cited by crypto proponents as a key reason for seeking alternative stores of value. In the latest video from Lark Davis, he discusses the current crypto market and whether we're nearing a top. He looks back at what caused problems for investors in the last cycle, like the FTX and Terra Luna collapses, and compares the 2017 ICO craze to today's market. Now, things are different. The return of hot IPOs and SPACs signals that investors are willing to take on more risk again. The video points out some wild valuations in the tech world, like Palantir's PE ratio of over 500, drawing parallels to the dot-com bubble. In crypto, billions are flowing into ETFs, and U.S. Bitcoin ETFs now hold 6.1% of all Bitcoin, worth about $150 billion. Still, retail investor excitement isn't at peak levels yet, according to App Store rankings. Some analysts believe this cycle is far from over. Fidelity suggests we're in a late expansion phase, and Carson Research notes that at 32 months, this cycle is only about halfway through the 67-month average. AllianceBernstein even predicts a top in 2027. The video suggests we might see a local top in 2025, but floats the idea that we could be in a 1997-like moment with a massive AI and crypto bubble ahead of us that could last for years. The main point is that with institutions now in the market, this cycle could be longer and more intense than many expect. The video's core idea that the market cycle might be extended due to institutional involvement is playing out in a very interesting way. We are seeing some signs of froth, similar to what the video described. Ethereum, for instance, just hit a new all-time high of over $4,900 before pulling back. At the same time, Bitcoin has seen volatility with a recent flash crash triggered by a large seller. This shows that while big players are in, the market is still susceptible to sharp moves. The institutional story is complex. While Q2 saw massive institutional investment of $33.6 billion into Bitcoin ETFs, the most recent weekly data shows significant outflows from Bitcoin products over $1 billion. Interestingly, as money left Bitcoin ETFs, Ethereum funds saw inflows, suggesting a rotation of capital within the crypto space. This aligns with the video's point about market maturation, where investors are not just buying magical internet money, but are making strategic allocations between top assets. The regulatory landscape mentioned in the video is also evolving. The Genius Act for stablecoins has been signed into law in the U.S., providing some clarity, which is a massive step forward for the industry. This regulatory progress, combined with the continued high valuations in the tech sector, where the S&P 500's price-to-book ratio has surpassed the dot-com peak, paints a picture of a market that is risk-on, but also on edge. The current environment feels less like a definitive top and more like the interesting phase the video describes, where institutional flows and regulatory developments are creating a new, less predictable cycle. In the latest video from the Ben Cowen channel, the main topic is Ethereum's recent surge to a new all-time high. Cowen celebrates this achievement, which aligns with his long-held prediction that Ethereum would revisit its lower regression band before making a significant move up. Despite the celebration, he expects a local top to form within the next week, possibly after hitting the $5,000 mark. His primary forecast is for a substantial pullback in September, citing historical data from post-election years where Ethereum dropped 34% in 2017 and 48% in 2021 during that month. He believes this correction is a necessary and healthy setup for a more explosive rally in October. Ben Cowen's forecast of a September pullback after a euphoric run-up is a classic take on market cycles, and it's particularly interesting given the current climate. As of late August 2025, Ethereum has indeed been showing strength, hitting a new all-time high of $4,953. The market is currently trading around the $4,700 level, showing some volatility after the peak. The bullish sentiment is strong, fueled by significant institutional adoption, with Ethereum ETF inflows projected to hit $28.5 billion in 2025 and corporate treasuries rapidly adding ETH to their balance sheets. This institutional demand, with some analysts noting a capital rotation from Bitcoin to Ethereum, seems to be a primary driver of the recent price action. In the latest video from CryptoZeus, George explains a sudden dip in the crypto market, where Bitcoin briefly fell to around $110,000 before recovering. This was caused by a single whale selling off 24,000 Bitcoin at once. Despite this large sell-off, which resulted in $250 million in liquidated long positions, the market absorbed it surprisingly well, showing its current strength. He mentions that this isn't the first time a whale has sold off a large amount of Bitcoin to move into altcoins, pointing to a similar event the previous week where a whale went long on Ethereum. The video also touches on the week ahead, noting that several major economic reports are expected, including NVIDIA's earnings, the GDP report, jobless claims, and the PCE inflation report. He suggests that some of these reports, even if they show negative economic signs, could be good for the market, as they might encourage a 50 basis point interest rate cut. George also talks about the start of an altcoin season, with Ethereum and Salons showing strong momentum. He brings up a clip of Charles Hoskinson expressing frustration about Cardano's price performance, despite its strong yearly gains and ecosystem growth. This leads to a broader point that many older Layer 1 and Layer 2 altcoins like Chainlink and Avalanche are still significantly down from their all-time highs, presenting potential opportunities for investors. The market's reaction to the massive 24,000 Bitcoin sell-off is indeed a sign of its growing maturity. A few years ago, such an event could have triggered a much more severe and prolonged downturn. Instead, we saw a quick dip and a relatively swift recovery, with Bitcoin currently hovering around the $112,000 mark. This resilience is encouraging, especially as we see capital rotating into altcoins. Ethereum is holding strong above $4,500, and Solana is trading near $188, suggesting that investors are looking for opportunities beyond Bitcoin. The upcoming week's economic data, particularly the PCE report, will be very telling. Inflation figures will heavily influence the Federal Reserve's next move on interest rates, which in turn will impact the crypto market. The Fear and Greed Index is currently in the neutral zone, indicating a balanced market sentiment, which could mean we are consolidating before the next major move. The narrative of undervalued older altcoins like Cardano, which is currently priced around 84 cents, and Chainlink at about $23.27, is gaining traction. While they haven't reached their previous highs, their established ecosystems and communities could attract renewed interest as the market looks for the next wave of growth. In the latest video from DataDash, the host breaks down the recent sharp moves in the crypto market. Bitcoin saw a drop from around $117,000 down to $110,000, while Ethereum popped to a new all-time high before pulling back. The analysis suggests Bitcoin is in an aggressive uptrend, but is testing key support levels. One important short-term level is $107,000. A more significant long-term area to watch over the next 6 months is $97,852, which represents the average price from the first half of 2025. The speaker believes we could still see a push up to the $130,000 to $140,000 region for Bitcoin within the next month. After that, he anticipates a major correction of 30 to 40% could set in for a few months. For Ethereum, its brief new all-time high is seen as a potential short-term top, with a possible pullback to around $4,600. If Bitcoin makes its run to $130,000, Ethereum could reach between $5,600 and $7,000. The altcoin market is showing a bullish cup and handle pattern, which could mean more upside for altcoins, especially as Bitcoin's dominance falls. The video's analysis of a potential Bitcoin run-up to the $130,000 to $140,000 range, followed by a sizable correction, presents a compelling scenario. As of today, Bitcoin is trading around $112,000, trying to find its footing after the drop discussed in the video. The market did indeed see a flash crash to below $110,000, adding weight to the speaker's focus on the 110-190 target from the JT Shark pattern. The crypto fear and greed index is currently sitting at 47 in the neutral zone, which aligns with the speaker's point that the market isn't showing extreme greed, potentially leaving room for another move up. Ethereum also followed the predicted script, hitting a new all-time high of over $4,950 before pulling back to the $4,600 to $4,700 range. The ETH for Bitcoin ratio is currently around 0.04, reflecting the recent strength in Ethereum that the video highlighted. The broader market is being influenced by growing institutional adoption, with Europe's MiCAR regulations fully operational since January 2025, providing regulatory clarity that could continue to attract large investors. While the speaker's short-term bull case remains in play, the downside target of $97,852 is a sobering reminder of the volatility inherent in this market, especially with recent large liquidations shaking trader confidence. In the latest video from Crypto Wendy, she covers the recent mix of news surrounding XRP. The SEC has delayed its decision on the Wisdom Tree Spot XRP ETF, which wasn't unexpected given the regulator's cautious approach. She remains optimistic that once one crypto ETF gets approved, others will soon follow. On a brighter note, Gemini has rolled out a new XRP credit card. Cardholders can get 4% back in XRP on gas and ride shares, 3% on dining, 2% on groceries, and 1% on other purchases. Some merchants are even offering up to 10% back. Additionally, Gemini has expanded its support for the RLUSD stablecoin for U.S. users. It was also mentioned that Ripple provided Gemini with a $7 million credit facility before its IPO filing. The video also highlights a statement from Charles Hoskinson of Cardano, who announced that the Lace wallet will soon support XRP. He also discussed the Midnight airdrop, which will include several cryptocurrencies like XRP to foster greater interoperability within the crypto space. She believes that such collaborations are vital for the future of American-made crypto projects. The SEC's postponement of the Wisdom Tree Spot XRP ETF is a familiar story in the crypto world. Regulators are taking their time, and this delay simply extends the waiting game for broader institutional adoption of XRP through traditional investment vehicles. At the same time, the launch of the Gemini XRP credit card is a smart move for retail adoption. By offering tangible rewards for everyday spending, it lowers the barrier to entry for many and could increase the daily use of XRP. The current crypto market is showing some signs of volatility, with Bitcoin recently dipping below $113,000. In this environment, utility-driven developments are what can set a project apart. The collaboration between Cardano and Ripple is another interesting development. As of late August 2025, the price of XRP is hovering around $2.87 to $3, and the overall market sentiment is neutral. These partnerships that focus on interoperability are becoming increasingly important as the industry matures. Projects that can work together are more likely to build a stronger and more resilient ecosystem. In the latest video from The Modern Investor, the host talks about a continuing and intense trend of companies and institutions buying up large amounts of cryptocurrency, particularly Ether and Bitcoin. He points out that companies like SharpLink are aggressively accumulating Ether, with SharpLink recently adding another $53.9 million worth, bringing their total to 480,000 ETH. The host suggests that a handful of these companies could potentially buy all the remaining Ether on the market by the end of the year. This massive buying pressure could send Ethereum's price to between $10,000 and $15,000, which would likely cause other altcoins to surge as well. The discussion then shifts to Bitcoin, highlighting that the buyers are no longer just big financial institutions. A Japanese nail salon chain, Convano Inc., is planning to hold 21,000 Bitcoin by March 2027 and has already started buying. The host finds it very strange that this massive wave of corporate buying is happening without the usual flood of everyday retail investors entering the market. Finally, he mentions Metaplanet, another company with huge Bitcoin ambitions, aiming to acquire 100,000 Bitcoin by 2026 and possibly 210,000 by 2027. The host wonders if these companies will actually be able to hit their massive accumulation targets. The video's focus on widespread corporate and institutional crypto accumulation is right on the money with current market trends. We're seeing this play out in real time. For instance, Metaplanet just added another 103 Bitcoin to its treasury, bringing their total to nearly 19,000 Bitcoin. Similarly, Japanese companies like the nail salon chain Convano are making headlines for their Bitcoin purchases, signaling that this trend is expanding beyond just tech and finance giants. The narrator's observation about the lack of retail FOMO is particularly interesting. While institutional money pours in, the market is currently experiencing a bit of a cooldown. Bitcoin is trading around $112,000, down from recent highs over $124,000, and Ethereum is hovering near $4,600 after briefly touching a new all-time high. This disconnect between heavy corporate buying and sluggish price action could suggest a consolidation phase before the next major move. The institutional confidence, exemplified by Sharplink's goal of amassing 1 million ETH, is building a supply shock scenario, especially for Ethereum. If retail investors do eventually enter with the force seen in past cycles, the limited available supply could have a dramatic effect on prices. In the latest video from the Crypto Jeb channel, the host explains his short-term bearish stance on Bitcoin for the next 3 weeks. He believes the $112,000 level is in danger of becoming resistance. If Bitcoin fails to rally and stay above $115,000, he predicts a correction down to the $100,000 to $105,000 range. A key factor in this analysis is a CME futures gap between $113,000 and $117,000. The speaker notes that if Bitcoin can fill this gap by rallying to at least $117,000, it would be a very bullish sign, potentially leading to a new all-time high. However, he leans towards a more bearish scenario where the price will drop first, citing the amount of time Bitcoin has spent below the $112,000 level as a sign of weakness. Despite the short-term bearish outlook, he remains bullish in the long run and sees a potential drop as a significant buying opportunity, especially around the psychologically strong $100,000 mark where he expects a lot of buy orders to be waiting. He mentions that a Federal Reserve rate cut in September could be the catalyst for the next major rally. The video's analysis of the $112,000 level as a critical point for Bitcoin is quite timely. The current market is showing a lot of indecision, with Bitcoin's price hovering around this exact area. Recent events, such as a significant whale selling off 24,000 Bitcoin, have added to the downward pressure, causing a flash crash and substantial liquidations in the market. This aligns with the video's short-term bearish sentiment.